Hello, everyone. Welcome to Wall Street and Main Street podcast. My name is Mo, and today's guest is a returning guest, Jerry Robertson. He's the editor of the Follow the Money Daily. But before we get into our podcast, I'd like to give a shout out to our sponsor. This podcast is sponsored by Grant Stone Shoes, and they are run by a family of third-generation shoemakers which make classic Goodyear welt shoes using full-grain leather. Now, Jason and I own a pair, and we love them. So we worked out a special offer for our listeners. So when you go to grantstoneshoe.com, you can enter the promo code GOLD, and you get 10% off any purchase. Now, if you don't believe our feedback, just go Google Grant Stone Shoes, and you'll see a lot of great feedback on their shoes. So, yeah, definitely check that out. Jerry, how you doing?
Great to be here. Thank you so much, Mo, for having me on.
No problem. So I want to start off this podcast by talking about the relationship between Saudi Arabia and the U.S. and how that's going to affect the petrodollar. There's a lot of tension. It seems like there's a lot of tension between Saudi Arabia and U.S. A lot of it coming from, recently the email leak that's saying that Saudi Arabia has been financially supporting all the terrorist group in the Middle East, such as ISIS, and then also people that were the victims of 9/11 can now sue Saudi Arabia for their role in 9/11. So I want to talk about that tension and how that's going to affect the petrodollar, because when people buy oil from Saudi Arabia, they have to use the U.S. dollar and not any other currencies.
That's a very wise question, Mo, in my opinion. I think that's a very important topic that is just really not been talked about in the mainstream press at all. Well, and in fact, the idea or the concept of the petrodollar system is just really non-existent, and it's so unfortunate because it helps so many people understand what's happening today. And without an understanding of the petrodollar system, it's hard to really get your arms around or hands around what's really happening. We talk about the petrodollar system extensively in our book. I wrote a book called Bankruptcy of Our Nation. It covers what the petrodollar system is all about, a lot of resources in there and citations. But if you go to WikiLeaks, for example, and just type in the phrase petrodollar, you'll find a tremendous amount of information from the Kissinger cables. And you can actually go do your own research, and you can go see what's really happening. And what you'll discover is that back in the 70s, when we had this petrodollar system, we made a deal with the devil. And in essence, what we did was we said, look, we'll take care of you, Saudi Arabia, militarily speaking. And that, of course, was really intended to protect them against Israel, because Israel was a rising power back in the 70s. And they had just won the 1967 war and the 1973 Yom Kippur War. And all of this had been going on, and Saudi Arabia comes out of this strengthened by the United States. Over time, that relationship has really been insidious, as we have seen how 15 of the 19 hijackers on 9/11 were Saudi Arabian, of a Saudi Arabian descent, and also how Osama bin Laden himself was a person of Saudi Arabia, citizen of Saudi Arabia, and his father had very high connections within the Saudi Arabian royal family. And so, we look at this relationship and we see now Donald Trump coming onto the scene, who really has no regard for trying to be political when it comes to these matters. And he has pointed the finger at Saudi Arabia and has publicly drawn attention to the petrodollar system by pointing out how we constantly defend them, but they don't pay us. He says, we defend Saudi Arabia, but Saudi Arabia doesn't pay us. Well, what Trump kind of needs to know is that, and he probably does, I'm not saying he doesn't, but my point is that we are being paid by the Saudis. It is the petrodollar system. They price the oil in dollars, as you pointed out. They buy the treasury bonds. They do the petrodollar recycling. We, in exchange, are their military. So when you join the United States military, you are signing up to protect the folks who bring you radical Islam, which is in Saudi Arabia. So the petrodollar system is coming under attack now because there are so many tensions between Barack Obama and Saudi Arabia. Barack Obama refuses to go to war with many of these countries, as Bush was willing to do. Bush was willing to go into Iraq, even though we had no reason to go there. He was willing to go into Afghanistan, even though we had these 28 pages that proved without a shadow of a doubt that the Saudi government had their fingerprints on the gun of 9/11. Even though we had these 28 pages, they were suppressed by the president, and we were told that it was Iraq. We were told that it was Saddam Hussein, or we were told that it was Osama bin Laden, hiding out in a cave in Afghanistan. And so that's what we were told. Over time, we now find that Obama has not been willing to go to these wars. He's not willing to go into Syria and finish off Assad. He's not willing to go into the Middle East and remake it for the benefit of Saudi Arabia, as Bush was willing to do. And so so the concession that Barack Obama has made is that maybe he won't send boots on the ground into these areas, but he will sell weapons. In fact, since coming to office in 2009, the Obama administration has facilitated more than $115 billion of arms sales, 42 different arms sales, to Saudi Arabia. So we have sold more weapons to Saudi Arabia during the last span of several years than we ever have in the past. So basically, we are continuing our Middle East assault, but we're no longer doing it with boots on the ground, as that has become highly unpopular. Now we simply funnel money to Saudi Arabia, and then they, of course, take that money and funnel it to ISIS. And then we turn around and say, oh, look at ISIS, we've got to send more military in. So we go in. It's a big disaster brought to you by the military-industrial complex that we were warned about by Eisenhower. So it's an absolute disaster. What's going to happen? Will Trump win and bring down the petrodollar system? I don't know if he even has a shot at this point. Perhaps he does. The pendulum could swing at any moment, but I would say that you've definitely got your finger on the pulse there with the petrodollar system. That is the big question mark. When that and you know how it ends, Mo. You'll know that the petrodollar system is nearing its end when you get a press release that looks like this. The press release will say something along the lines of Saudi Arabia has announced that it will also now accept euros for oil, for all of its oil. It'll be a benign headline like that. It'll be on Bloomberg. No one will really notice it. It'll be like, well, Saudi, well, that's a slap in the face to the U.S. Oh, it'll be more than a slap in the face. That'll be a cause for war. And then once you see that headline, probably within 3 months, you will begin to see terrible stories about Saudi Arabia in the mainstream press. That will be the precipice for the next war and invasion. In that time, it'll be against Saudi Arabia.
And yeah, I think thanks to the petrodollar system, we have artificial demand for the U.S. dollar and for the Treasury bond, which has kept the currency afloat. Otherwise, I think the value of the dollar would be a lot lower today. Even though the Federal Reserve is now the number one buyer of Treasury bond, it's no longer China or Japan or Saudi Arabia. It's the Federal Reserve now. So yeah, the petrodollar has prolonged the fiat currency, but it looks like countries are diverting away from the petrodollars and using their own currencies. And if you notice that anytime a Middle Eastern dictator in the past had gone away from the U.S. dollar, they ended up being taken out of power. So Saddam Hussein went away from the U.S. dollar, then Gaddafi in Libya went away from the U.S. dollar, and now I think Assad wants to go away from the U.S. dollar as well. So I see. It's interesting to see how all these Middle Eastern dictators want to get away from the U.S. dollar, and yet all of them end up dead or trying to be taken out of power.
Yeah, that's how the system is played, and I think that's been really well addressed by people like John Perkins. He wrote a great book called Confessions of an Economic Hitman. You can go back and see all of the different incursions that the CIA went into to overthrow dictators who didn't please the empire in Washington. But it's definitely true, and it's very sad to see what's happening in the Middle East right now, Mo. I mean, these are human beings. This is really sad. I mean, we're seeing in Yemen, for example, civilians being slaughtered on a massive scale by the Saudi Arabian government, and there are no pictures of young boys and girls coming out of Yemen. They're coming out of Syria, and that's certainly drawing attention and helping the cause of Saudi Arabia in Syria. but we're not seeing any precious images of small boys or girls coming out of Yemen all bloodied up. I mean, that would cause an uproar as well. But you won't see those in the mainstream media because the only deaths that really matter are the ones that the U.S. and the Saudi Arabian government decide matter. The other deaths are just simply collateral damage. And unfortunately, the United States is financing the shelling of Yemen through its weapons to Saudi Arabia, through the Pentagon support we're providing them. It's just a total disaster in the Middle East. And I think the concern for some is that the Saudi Arabian government will finally begin to turn more heavily towards another suitor. And, of course, there are plenty of willing suitors who would love to take our place.
Right. Yeah, the Middle Eastern, it's heartbreaking to see what's happening in the Middle East, in Iraq, Afghanistan, Syria, and, Yemen as well. So which is why I think the U.S. need to get out of the Middle East and not intervene, because they're definitely making things worse the past couple of decades. So let's shift gears here, and I also want to talk about what's going on in Europe and the Euro banks. A lot of them are collapsing or getting close to being going down the drain. One of them, the biggest bank in Germany, Deutsche Bank, which getting close to collapse and being bailed out by the EU, but it hasn't sent any economic shockwave to the financial market. Why do you think that is?
Well, I think that they're biding their time. I have seen a few different stories that have come out, but at this point, there's a lot of rumors that are circulating, and this is kind of a dangerous time. Investors who put money into Deutsche Bank back in 1997, 1996, about 20 years ago, they're sitting on a whopping negative 60% return after 20 years of putting money into Deutsche Bank. Deutsche Bank in particular is a interesting bank in the fact that it was one of the few banks that still exists that was a financier to something completely evil. Deutsche Bank, of course, the bank that provided the financing and the lending for the Auschwitz death camps in Nazi Germany. They also were they provided banking services to the Gestapo in Nazi Germany. And yet today they're just another glorious bank that you can go down to and just deal with, Deutsche Bank. Despite all of their criminal activity, despite the fact that they have provided all kinds of support to terrorists, to drug lords, to other types of things, and tax evasion, sanctions violations. I mean, no matter what it is, Deutsche Bank has a department for that. But what we found is that the vultures are kind of circling Deutsche Bank right now, for sure. I mean, we are one information leak away from investor panic over the perceived failure of another major global bank. So I think the major point there is a perceived failure. I mean, I think that's the word that needs to be played up here. We are one information leak away from investor panic over a perceived failure. And what I mean by this is the fact that we are in a faith-based economy today. Everything hinges upon public perception. So while the German government has publicly promised not to provide any type of rescue package to Deutsche Bank, if a life-saving infusion is required, we would expect that Frankfurt would be happy to step in and put the taxpayers on the hook if necessary. So while we don't really know what's going to happen, I think that we're likely not on the doorstep of another Lehman moment. Maybe we have a little more time before that happens, but this could be it. This certainly could be it. It seems a little too easy, the fact that it's coming out this way. Typically you have if it blindsides you, that's the one you want to be worried about. It's the black swan or the Enron that comes out and destroys the current uptrend. But right now, when you look at the stock market, the last thing we want to see is something like Deutsche Bank unleashing and going down, because that, of course, would put tremendous pressure on an already very weak uptrend in the stock market. I know you wanted to talk about the U.S. stock market, but I mean, certainly we are seeing a stock market that looks very fully valued, in fact, overvalued, very richly valued, and it looks like there's a lot more movement to the downside in the future than to the upside.
Yeah, we'll definitely talk about the stock market in a few minutes. Yeah, I agree. I'm not sure Deutsche Bank would be the potential black swan event because black swan event is something that comes out of nowhere, like Lehman Brothers or Bear Stearns. So we'll see. I know they definitely have cash flow problem because a lot of the hedge funds are pulling their money out. They use that bank for at the clearinghouse, and a lot of them are diverting their money away to other banks. Also, they have a big problem with derivatives. I read somewhere that they have over $46 trillion in derivatives, and so that's very.
Well, there's no doubt about it. I mean, Deutsche Bank employs around 100,000 people in 70 countries. I mean, so by all definitions, they're far too big to fail. But if you look at a notional value, you're right. I mean, the notional value of derivatives owned by Deutsche Bank are the highest that I have found in my research. I don't think that any bank has more exposure than they do. The Euro Stoxx 50 just recently delisted the company. I mean, so Deutsche Bank is in a really tough spot, and it's provided investors with very little return. They have a very sordid past. I think they should be put out of business. I think they're criminals, but we'll see. We'll see what happens to the bank itself.
Yeah, and they just raised money selling junk bond with a coupon rate of 4.25%. So that's not very good for them. Maybe we'll see a bail-in coming down the road. What do you think?
Possibility. I mean, those thoughts are quite scary when you think about it, but I could see that certainly happening. I mean, the Frankfurt lobby will do whatever it takes. They'll privately howl until they get their life-saving financial infusion from the government or from whoever they need to get it from. But I do know that corporations, this is a tough place. This is a bad market to be in the situation Deutsche Bank is in. This is not a good time to have these problems.
No, it's not. And other countries with big banks are having the same problem as well. Italy, even here in the U.S. with all these big banks, they're not performing very well. So let's shift gears and talk about what's going on in the precious metals market. Precious metals had a good year so far. Gold and silver was up at one point 30% year over year. But recently it got slammed down. Just wanted to get your thoughts on what's going on in the gold and silver market.
Yeah, I mean, so as far as a long-term perspective, we are bulls on gold. From an insurance perspective, we believe that gold is catastrophe insurance. We believe that it's real money. We like gold. We like silver. Now, but as far as trading gold and silver, we really have two different views. When I think of gold in a physical way, when I think of a physical gold bar or a physical gold coin, those are things I want to hold in my hand. I want to have possession of those things. But if I'm buying, for example, a stock certificate in a gold mining company, well, that's just paper gold to me. And I can trade that at will. I can sell that, I can buy that, and I feel no tinge of guilt. But as far as my physical metal, I know that I need to have a core liquid position in gold and silver. So aside from that, when I speak about trading, I'm not talking about my own physical possession of metal. I'm talking about the paper gold and silver that I trade, because I do like to follow the gold and silver markets. Well, we aggressively began buying mining stocks back in February of 2016 when the price and volume action confirmed a new uptrend on the weekly chart. And we alerted all of our subscribers in the very beginning of February that we were going to be adding heavily to gold. And then, of course, in March, we got another major uptrend. It was a confirmed long-term uptrend on the monthly chart. And so once we had both of those, we just stayed in gold and in silver all the way until just as recent as last week. Last week, when we had the big sell-off, we got a sell signal on the weekly chart. And so we are locking in our gains on a very profitable trade that began back in February. We pyramided in on the way up. And so it was a very good trade. Now we're out. We believe that the long term on the monthly chart of gold and silver still looks good. We still have plenty of room to move back up to the upside. We're just waiting for a confirmation of that on the weekly chart before we get back in. So we'll alert our subscribers whenever it's time. That's what we do every single weekend. We put out a weekend briefing, and in it contains all of the new uptrends and downtrends that our system is throwing off. We've been doing this for many years, and we called the 2008 crisis, our system did. In anyone who actually can look at a chart and pay attention to price and volume. It's not really rocket science. It's not that big of a deal. It's fairly simple to do, but many people just maybe they don't know how to do it or they don't have time to do it. Well, we can certainly help people who want to learn how to benefit from reading price and volume action on the chart. We love to teach that to our members.
Yeah, trend trading is, I think, my favorite technical analysis methodology, mainly because you could it's easier compared to other methods, and also you could look at the chart and see when you're gonna when the market had top and bottom. So yeah, I agree. I think trend trading is by far the best one. But I want to get your thought. Do you compared to the other market, do you find trading gold and silver harder because of the volatility and a lot of claim that it's manipulated as well?
Well, surely it is, but at the same time, we literally just trade trends, and so whenever we get a confirmed uptrend with price and volume action, that's our buy signal, and we go in. And so, no, there's manipulation, but we've been doing it a long time, and whenever we see a downtrend, we get out. So that's kind of how we approach it. We're super trend traders. We really focus on the trend alone. We don't really listen to opinions. We just follow the trend. Okay,
great. And if people want to learn about trend trading, do you have any books or anything that you recommend to people if they want to learn how to trend trade?
That's a great question. I think there are some books out there on trend following. You can read a book called Trend Following by Michael Covell. It is a good book. There's some other books as well. I know that another person who we've had on the program before who does trend trading as well is also Meb Faber. He does a lot of trend following. I think that really what you want to do if you want to learn trend trading is or how to trend trade is you really just want to focus on learning some basic technical analysis. And there's a lot of articles on our site. In fact, if people would go to our site and search for trend trading, I think they would find several things. But I think Trend Following by Michael Covell would probably be the first book that comes to the top of my head, specifically focused on trend trading.
Yeah, we had Michael on for a podcast in the past. Yeah, he's a good guy. He's a good guy to learn trend following. So for the gold and silver market, it looks like it's consolidating for now, which is kind of normal when you do technical analysis for the past couple of years on gold and silver. Every time it goes up, it tends to consolidate and dip down. So this is a good time for investors that want to get in the mining stocks or just want to buy more, gold and silver at a lower price.
Yeah, it's very, very possible because if this long-term uptrend holds, now we are seeing a lot of strength in the dollar. The dollar has really strengthened over the last few sessions. We're seeing some really big weakness in the British pound. We're at a probably, the last number I saw, the last headline I saw was that the pound was at a ridiculous 168-year low. I don't know how accurate that is, but I know we're at multi-year lows, multi-decade lows on the pound. And then also we're seeing some weakness still in the yuan, and then, of course, the euro having some problems. So the dollar is really benefiting in this environment, plus all the geopolitical problems. While normally you would expect gold to be rising, the dollar is the beneficiary here. So at least temporarily, that's where we are. Maybe this is a great opportunity to be adding to your exposure to gold mining stocks or to gold here before the next uptrend begins. But we'll be watching the weekly chart for that new uptrend.
So you mentioned some of the currencies, so let's talk about the currencies, especially the British pound and the euro. So with the Brexit, we're starting to see some volatility in the British pound. A lot of people are predicting that the pound will start to go down for the short term, and then also with the collapse of some of the euro banks, we could see a lot of volatility with the euros as well. So I want to get your thoughts on that.
Well, the British pound's decline has been pretty epic. It also comes on the heels of the UK telling the world that Brexit was no big deal. Well, it is kind of a big deal when your currency goes into free fall. And so I think that's, there are some concerns there. If you look at the British economy broadly, though, and you just look at the actual metrics, you don't see a whole lot of just absolute unbelievable things that have happened since Brexit. You don't really see anything that's just totally deteriorating. So overall, I mean, the economy is still kind of the same that it was after, at the time of Brexit. Haven't seen any major changes, at least from my view. But you are seeing, of course, the currency fall, and that, of course, is a vote of confidence, and that's a little worrisome. So the British pound, the weakness there, the euro. Again, the euro has a lot to do with, again, Frankfurt. They have this desire to do whatever it takes to prop up assets. Look, we have built our entire economy upon interest. Everything is based upon interest. During the last, if you take a look at government debt, it's at all-time highs. If you take a look at corporate debt, it's at all-time highs. If you take a look at student loan debt, it's at all-time highs. If you look at credit card debt, it's at all-time. I mean, no matter what debt you look at, they're all through the roof. And now you have interest rates at unbelievably low rates. And that, you just fast forward the tape. All you have to do is fast forward the tape 5 years. Fast forward it 10 years. What does it begin to look like? And you begin to see all of these mounting debts. We're going to have a deleveraging period, especially if interest rates get out of control. I think that's the most concerning thing to me, is that we're beginning to see an erosion of faith in the Federal Reserve. Now, am I concerned about the Federal Reserve? Do I want them to have faith? No. I think the Federal Reserve is a fraud and should be shut down. And I think that the money should be given back to the taxpayers, and that the principal should be imprisoned. But as far as the Federal Reserve itself, as long as it's still ticking, you don't want it to be imploding on you. You want to at least put it out of its misery in a kind and decent way. And with the Federal Reserve, the way that things are working now, we're beginning to see hints that they want Yellen out of the Federal Reserve. So we're starting to see a movement of just simple a lack of credibility with the Fed. The Fed has a credibility problem, is what I'm basically saying. And the more that credibility problem gets larger, if Trump keeps picking at that scab, as every time he brings up the Federal Reserve and he continues to point the nation's attention to the Fed, that's one thing that Donald Trump has done. You have to give him credit that he has drawn attention to Saudi Arabia and the crimes that they have committed and the crimes we have committed with them. He has pointed to the Federal Reserve and pointed out the fact that they are a total sham. So good for Donald Trump on those things. I mean, good for him for saying those things. And maybe, his followers will take a moment and listen to what he has said there and investigate these things. Because the Federal Reserve, is a total fraud. And the concern is that what happens if interest rates begin to get out of control? This is the one thing that central banks fear the most. And if you go back and look at central banks that have imploded, you'll typically see something like this. And that is that they come out and they declare what the interest rate target is going to be in their, official declaration. Interest rates targets shall be thus and thus, such and such. And then what happens is the interest rates begin to creep up above those levels out of the central bank's control. I've been looking at yields over the last few weeks, and I'm beginning to see a lot of them begin to actually have buy signals. Like if you could actually buy a yield, if that was like a stock, a lot of them are forming new uptrends. You can begin to see them begin to break out, which is a little concerning, because all of that, of course, is the price of money, and that's the price of debt. But we're beginning to see that lift. And so the concern is that do interest rates suddenly begin to outpace what the target is for the Federal Reserve? And then you see the emperor has no clothes. That's the concern that I have when I look at the Fed.
What I noticed from the Federal Reserve is that they seem to self-contradict themselves. They come out and say that the economy is doing well, it's getting strong. Well, they say the economy is doing well, it's getting stronger. Why don't they raise the rate? And then they come and say, the economy is too fragile. We're going to have to hold off on raising the rate. So which one is it? Is the economy not doing well, or is it doing well? Obviously, it's not doing very well. But that's one of the ways. That's why I think they're losing a lot of credibility, because they keep flip-flopping on the state of the economy.
Yeah, they do. Yeah, they do. And I think that's part of the reason why the credibility is being lost, as you point out, is the fact that people are beginning to realize that they're making it up as they go. And the Fed really
Yep.
they have no other choice, Mo. I mean, these are unprecedented times. We've never been in a place like this where you have fiat currency everywhere, where you have debt explosions everywhere. And, I mean, this is just, what do? You literally got to make it up because you have no frame of reference for this stuff. So they're making it up, and hopefully they can keep doing that and keep the illusion of prosperity going for some time is their hope. But, it's getting the twilight is here. I mean, the night is coming, and you can certainly sense that this sham won't last much longer.
Yeah, and we're starting to see a lot of leak from now, a lot of air coming out of that bubble in the economy when it comes to the bond, stock market, and real estate. So let's talk about what's going on in the general market, the Dow Jones and SP 500. So as a trend trader, do you think the market has topped here? So I'm looking at the chart, and it hasn't done much ever since it made all-time high, and hasn't made any move or advancement. And if you look at the chart, if you look at the long-term chart, it's kind of gone sideways for the past couple of years. Is this a sign of a market top?
Yeah, I mean, we were at this same place. I remember this kind of same feeling that we had right in the middle of last year. In fact, it was about July or August. I think it was in August of last year when we began to kind of sense that we were really kind of topping. And then, of course, that led into that August sell-off where we had a really scary August. We saw a big spurt of volume. We saw a lot of volatility during that time. And then we kind of made another lower high after that later on in the fall of 2015. And then we had a really big sell-off again at the beginning of 2016. Well, we shook that off, and we've been rising for most of 2016 in the S&P 500. But around the summertime, we got into the summer doldrums. And many people just said, well, this is the summer. This is what happens. There's low volume, and that's why we're not seeing the market rise. Well, where we are now is, as you just mentioned, we're sitting just below all-time highs that were set just over the last few months, as we've just been kind of grinding sideways at this very high 50 or all-time high. And so obviously we could penetrate that upside, moving up into the 2,200 range on the S&P 500, and have a lot of new bulls, begin to lead the market higher. We have begun to see a little bit of volume, a positive volume over the last few weeks in the S&P 500. But over the last few sessions, we begin to notice that some of the volume is beginning to come out. It does feel as if we are wound up tight because we've been going sideways for a while. In fact, there was a really good article in Market Watch just the other day, which is kind of surprising. And it said that the market was actually, the S&P 500 was caught in a symmetrical triangle pattern. They nailed it. That's exactly what's happening right now in the S&P 500. It is a symmetrical triangle pattern, and it's about to resolve. They can either resolve to the upside or they can resolve to the downside, and it looks as if, as of the recording of this tape or this interview, that we're seeing that movement to the downside. So we do expect a pretty big sell-off in the S&P 500. We expect a 40 to 50% pullback in another similar 2008 crash. As far as the catalyst, as far as what the catalyst will be, could it be something like Deutsche Bank? Sure. Could it be some sort of black swan event? Sure. Could it be WikiLeaks, dropping something on, the economy or discrediting some institution? I mean, could it be a bank failure and maybe even a WikiLeaks about banks? I mean, who knows? Who knows what's going to actually happen? But here's what we do know. We are one information leak away from a total panic because everybody knows that we're too high here. Everybody can feel it, and the market is just not acting the way that it should in a big, big uptrend. So there's a little concern now that we're going to see some pullback as we move into the end of the year. If Clinton wins in 2016, the presidency, we would expect that the market to be satisfied by that, assuming that things will continue as they have underneath Obama, which is the expansion of the stock market to all-time highs from extreme lows at the very end of Bush's presidency. And so I would think that most Wall Street folks would be happy with that. They like Clinton anyway, so it'll be a fine thing. If Trump wins, I think you could see some really big volatility. Could be up, could be down, but I think regardless, it'll be volatility because that right now has been beginning to be ruled out by some hedge funds and by some investors. They just don't believe he's going to win, so they're repositioning themselves for a Clinton victory. And if they're wrong, then of course that will cause a lot of volatility in the market. So that's how I'm basically viewing this. And I think the main thing for investors to be thinking about is what kind of economy will exist underneath Clinton? What sectors of the market will she really put money into? Which sectors will benefit? And vice versa. If Trump gets in, what will benefit? That's what an investor should be thinking right now.
Right, and Wall Street and the hedge fund love Hillary Clinton. I know Donald Trump has a lot of friends on Wall Street, but they're not donating as much money as they are to Hillary Clinton because they know Clinton's going to watch out for them if she gets into office.
Yeah, more than likely. I mean, they certainly like her. Absolutely.
Yeah, definitely. I still think Hillary Clinton's going to win, mainly because she has the establishment behind her, but it could change. We'll see what happens.
Yeah, I prefer not to comment on that.
Oh, I don't blame you. So one final question before I let you go.
Sure.
The stock market and a lot of other assets is overinflated. It's in a bubble. So a lot of investors are having a hard time finding yield. So do you have any advice for investors out there that's looking for a return in investment? I mean, they could trend trade, but if they can't, what else could they do?
Yeah. Well, first of all, let me say that whenever you use the word advice, I get scared by that because I'm certainly no advice giver. I'm just simply a trader and an economist. I used to be a financial advisor, but no longer. So I would always tell people, first of all and foremost, to always seek out a trusted financial advisor or a professional before making any decisions, and never do your financial planning on podcasts or AM radio. And we always tell our listeners the same thing, Mo. But let me make this statement that if you're looking for income, if you're looking for a way to make up for the fact that this is such a low yield world, you don't really have a whole lot of choices. I mean, you really, really don't. That's the whole point. I mean, that's really what's been the big complaint, is that there just really hasn't been. For the last little while, for people who were savvy and who were playing sectors, utilities were a great place to be. Utilities provided a really nice run in the stock market. So some of those safer utility stocks. I remember whenever I was younger, my grandfather had saved utility stocks for me, and I remember I learned about stocks, and I said, why did he buy utility stocks? And my mother said, well, because those are considered extremely safe. Utility stocks are considered safe. And, that's the way that the world has often perceived utility stocks. Well, they have really been throwing off a nice dividend, and they've also been in a nice uptrend. Well, that's recently ended, and so that one has run out. But I would say that for individuals, just as you mentioned, individuals looking for that really need some sort of system to identify new uptrends. That's what we do. So if you want to trade utilities, or if you want to trade technology or basic materials, or if you want to trade one of these basic sectors of the stock market and then receive the yield from it, well, what you want to do is you want to buy them when they form new uptrends, and then you want to sell them when they form new downtrends. And that's what we do. We just alert you to when new uptrends begin and when they end. So I would say that I'll give you, in my own case, what I have often done is I've been riding the bubble in corporate bonds. I use a Vanguard fund that invests in long-term corporate bonds. It pays about a 4% month dividend, and it's paid monthly. So it's a very nice dividend that's paid every single month, unlike some dividends that are paid quarterly. Well, this is paid every single month, and it's a 4% annualized. It's just the Vanguard long-term corporate bond fund. Do I think it's a bubble? Yes. Do I think that corporate bonds are going to eventually fail? Yes. But they're still in an uptrend. And so again, when they form a new downtrend, I sell them. When they form a new uptrend, I buy them.
And that's a good tip there. And I agree. People should never buy or sell based on listening to podcasts. They should always do their own homework or talk to somebody else about making financial moves.
Yeah, somebody who knows. Somebody who knows.
Yeah, definitely. So, Jerry, thank you for your time. If people want to find out more about your newsletter, your podcast, and your trading system, where can they go?
We would love to have anybody who wants to find out more about us go to followthemoney.com. Just followthemoney.com. And when you're there, you can click on the plans and pricing. And we have very reasonable memberships that you can become a member and begin receiving our weekly alerts. By PDF. You have access to our website. You can get on our website and find all kinds of videos and education and PDF downloads and reports. I mean, just a great place to go. Followthemoney.com. Check it out. Mo, it's always a pleasure to be on your program. I appreciate what you do, and keep up the good work. Thanks for having me on.
Thank you, Jerry. Thank you for your time. I appreciate it.